Dow Jones all heading south, all in the red. Dow Jones 180.10, and the S&P 500 at 2107, and the Nasdaq ended the day at 50.70. And now let's take a look at the commodities. Gold closing at 1190.40 an ounce, and oil closing at 60.22 per barrel. And another economic data this week, a U.S. economy pulled down consumer sentiment in May. The University of Michigan says its index showed a drop to 90.7 from 95.9 in April, a 6-month low. Well, here with us now is John Manley, Chief Equity Strategist at Wells Fargo Fund Management. Thanks very much for joining us.
Thank you.
John, so what do you put the contraction of GDP to? What's the underlying answer to that?
Well, it's oil, it's the dollar, it's the port closures, it's bad weather, and it's behind us. So I think that's really the important thing to remember, that I think it's not a good thing, but it's something that was and is not. And there's also some question on the seasonal revisions, because the first quarter numbers have come in rather low for the last 3 years, and they may not have the seasonals right.
We've had some pretty optimistic, pretty bearish sort of figures coming out of the economy. Has it thrown you off the mark completely? Has it surprised you? Has it taken you completely by surprise?
I'm never taken completely by surprise, but I'm always somewhat surprised. The numbers we saw today were not good. The one we just talked about is probably the least of them. I'm not that worried about consumer sentiments. Consumers will take care of themselves. I am worried about the Chicago PMI, which came in kind of weak. But so far, I don't have any sign the Fed can't handle it. I don't have any sign that it's going to fall apart in the next 6 to 12 months.
Let's look at the Fed, as you mentioned. And what about the interest rates? What do you think is going to happen there? Are we looking at June or are we looking at September?
Well, if you were Janet Yellen, what would you do? I wouldn't do it until September. And I wouldn't do it. Actually, I think I know exactly when they'll raise rates. They'll raise them when they think it's not tightening, when the economy is strong enough to take the raise in stride. They are not trying to slow down the economy. That's the important thing to remember. They will not do that. They don't have an oath registered in heaven to raise rates to a certain point. They're trying to keep the economy going.
Well, obviously the markets didn't take very favorably to the contraction of GDP. So how do you think do you think they're going to bring the raise increase much closer? You just said September, but
I just said they'll do it when they do it. I mean, I think that you've got to rely on them to do the right thing. They're very bright people, and they see the same data. They're going to be very data dependent. When the economy is better, when the economy can stand it, rates will go up.
Okay, let's look into the crystal ball if you can.
Okay.
How does this lay the foundations for the second quarter, do you think?
Well, I think we'll probably have fairly low expectations. So what I understand for profits, again, it's a flattish type quarter. I see no reason it's not going to be what it's been for the last 2 or 3 years, where you sort of ski slope into the end of the quarter, then the first 2 or 3 weeks when the numbers come out, they're okay. I think that the first and or the second quarter are probably as bad as it gets.
Okay, let's look at sentiment from consumers. How do you think that's going to ride out?
You know, well, first of all, I am kind of surprised that it went down, but that's a very volatile number. Sometimes I wonder who talks to them and who doesn't talk to them. May have a lot to do with it. I think the American consumer, once he or she gets started, is a tough cat to stop.
Yeah, because the consumer's been fairly bullish up until now, but
this is America. I mean, Americans came here to spend, and once they get started, unless you really strangle them, or unless it's different this time, which could always be, but that's a bad way to play it. I think I can still rely on the American consumer as much as I can rely on almost anything. So
seasonally, do you think, in terms of the summer sales and so on and so forth, and particularly overseas in terms of travel, do you think that's going to help?
Well, it's cheaper to go overseas. I mean, I think that's, you're going to see some of that. I'm not sure how much that helps our GDP and helps Europe, but that was the whole idea of the dollar going up in the first place, to help Europe. I think the U.S. will be fine. I think the consumers will keep on spending. I don't think the confidence numbers are really in decline. I think it's an aberration.
Okay, let's move on to the stocks. How do you think the stocks are going to take from this?
You know, it wasn't a good day today, but I've seen worse in the not too distant past. I still don't have evidence that leads me to believe there's significant risk in the market. That may develop. I'm not saying it can't happen. I just don't see the evidence of it right now. I think the market, my central point is that it's up 5-6% from where it is now at the end of the year. But if I had to say which side could I be wrong on, it's going to be better, not worse. I think there's the chance that people finally get enthusiastic. They haven't, and they almost do at the end of all bear markets.
Are the markets reacting at all? This is completely left of field. Reacting at all to the potential GOP candidates that are coming out there?
Which ones?
Which one have you got your money on?
Well, if I had enough, I wish I had enough money to put it on them all, because I'd be rich at that point in time. I don't think anyone has a real good idea what's going to happen there, and even when we're down to a Democrat and a Republican, whoever they are, it's still not going to be quite clear. So I think most times this doesn't really matter until you get close to the election, and even then, Wall Street hasn't had the party they usually like in power, and Wall Street's done pretty darn well in the last 6 or 7 years. So I'm not so sure we know what's good for us and what's not sometimes.
Everybody here to find out. John, listen, thanks so much for joining us.
Thank you.
Thank you.